face. Throw an elbow.
Hi everyone, this is Rachel Gaidadon here in the beautiful Las Vegas, Nevada, and today I decided to reach out to a dear friend of mine, happened to be also a dear and wonderful lender here in Las Vegas, Eitan Shafshak, and I decided to ask him a lot of questions that concern a lot of you out there, because as many of you know, the real estate market can be affected by the mortgage industry. So thank you so much, Eitan, for joining us today.
Thank you for inviting me.
Of course. So for the viewers that don't know you, do you mind sharing about yourself?
Well, my name is Eitan, but you already covered that. I'm a mortgage lender, and I have been for over 12 years. I like to keep my eye on what's going on. So there's a lot of stuff going on right now. So I would love for your people to know all about it, because I don't want them getting into some wrong information.
Oh, wonderful. Okay. So first of all, thank you for taking the time out of your day. I know with the 3 kids, it's challenging. I hope that none of them will barge in during the...
I got them locked in the closet.
We'll give it a try. So today we're going to cover 4 main topics, and let's just dive right in and let's talk about the interest rates. What is your take about it?
Okay, so I mean, rates are legitimately right now all over the place in a way that we have never, ever seen.
Okay.
I mean, what happened was in early March, this virus caused some uncertainty in the market, which brought down interest rates. Now, this caused a huge surge in refinances. Now, you might think, refinances are good, banks make money, but yeah, but remember that banks sell these loans to the secondary market, to investors, and investors who buy the mortgages, they pay extra upfront for the right to collect interest over time. So if the loan is paid off earlier than expected, like with a refinance, they either lose money or they make less, so that makes rates go higher. So they're bouncing a lot back and forth. And also everything that's going on because of this coronavirus, like the disaster relief bill and new developments, tend to change it drastically.
Okay.
So, different lenders could have different interest rates. Some lenders are more protecting themselves for the long run, so they might have higher rates. But yeah, they are all over the place right now.
So, based on the interest rates, did that affect the length of the process of getting a loan?
It's not the interest rates that affected the length of or the process or the difficulty in getting a loan. It's how freaked out the banks are, the lenders are.
Okay.
I mean, consider this disaster relief bill that was implemented. That encourages a lot of Americans that were affected by the virus to seek forbearance or a deferment on their mortgage and not pay their bill for a few months. Now, it's a great thing for homeowners that need it, but it has unintended consequences. Think about lenders. They're tightening their belts. They don't know if they do a new loan now, when they're going to get paid, if the borrower is going to file for a forbearance.
Yeah.
They don't know. I mean, in the past, they would verify your income a few days before closing, but now they'll do that several times before closing because they know a lot of people have lost their jobs. They know a lot of business owners, even for the self-employed, are closed down. So they want to make sure that these people are still working and earning what they have.
Yeah. So you mentioned a term that is called mortgage forbearance. Can you explain and elaborate a little bit about that?
Yes. So I mean, the base law that the federal government put into place is that, first of all, there will be the banks won't be charging late fees, and they won't be foreclosing on homes.
Okay.
Great. And a lot of lenders have put in options on what to do with those payments. So you can skip your payments for 3 months minimum. In most cases, it might be 6, and we don't know how long it'll last. But you have to be very, very, very careful on what that's going to cause you in later on, because forbearance is just what it means. Basically, you have to call your servicer, the mortgage servicer, the numbers on the statement, and ask them what they can offer you, because there are a couple options. There's either a deferment, where let's say you don't pay your payment for 3 months, and they
Okay.
just tack it on to the end of the loan, which makes your loan 3 months longer, which is great. Who cares? No big deal. But a forbearance can be very, very dangerous if what they're going to offer you is that you don't pay your mortgage payment for 3 months, but then on the fourth month, you're going to have 4 months payments due
Yeah.
in a balloon payment. So you have to be very careful, because that's going to be very difficult for a lot of people, especially after not working for 3 months.
Right.
So you have to contact your servicer. They're all doing different things, and see what they can offer you.
So I think that the biggest misconception out there is that the fact that the mortgage forbearance is like the best option out there and everyone needs to do it. Well, it's actually not the case, because it's on a case by case, and people need to reach out first of all to the mortgage carrier and fully understand what they are offering them,
Exactly.
and
Yeah.
then based on that, then make a decision that is best for them.
Right, because if you have to come up with 4 months of payments in one shot at the end, it could result in you having to modify your loan,
Right.
which could harm you later if you want to qualify for another loan or refinance on a purchase.
Now, it's a rumor that someone shared with me, so I'm going to ask you as an expert. Someone said that mortgage forbearance, if a buyer agreed to do that, it will ding his credit report, like a short sale or a foreclosure, not for the length of time, or it will ding their report for like 2 years. Did you heard something about that?
The forbearance is, well, yes and no. I mean, the forbearance itself is not what would ding that credit. Is what would happen after the period of it's being delayed, the payment. Like I said, if you have to come up with a huge amount and you decide to modify your loan, then that could ding your credit and that could harm you.
Got it.
But the initial forbearance shouldn't do anything to you. It's what happens afterwards, how they're going to adjust it, because they're going to have to collect that money eventually somehow.
Right, somehow. Okay, now a client of mine got a letter in the mail saying something that her house needs to be appraised. Does the forbearance process have anything to do with appraising the house? Or
No,
it's just coincidence that she got it at the same time?
it's not coincidence. What she got was just disclosure saying that they have the right to appraise the house.
Okay,
Not necessarily that they would, but that they do have the right to, and that she just needs to understand that.
okay,
Yeah.
okay. One of the next topics that I would love us to cover is, I think that you touched a little bit about it, but what are the changes that we see in qualifying for loans?
So basically, remember, these changes, this was extremely sudden. This sudden,
Right,
massive economic shift because of this pandemic is a big deal. Okay, I mean, could we say that the Spanish flu or the Great Depression wasn't a big deal? Yeah, they were, but they were in a different world.
Right.
Back then, you couldn't liquidate your 401k from your phone after reading a headline on the bathroom. But as far as the changes, lenders are really, really tightening their belts because of the uncertainty, and because if they don't, they won't last, because they won't have the liquidity to stick this thing out. So it's not to say that if you looking to buy a house or refinance, that you can. It just means that you have to be ready to jump through a lot of hoops, a lot more than before, during the loan process. For instance, we did see down payment assistance programs; those are all gone
Okay.
for now. Specialty programs, like if you have like low credit scores, people have 500 credit scores, there were special programs, or people under certain situations, those are gone. Low credit score possibilities are almost gone, but they're just a lot more requirements. They didn't raise the credit score requirement for FHA, which a lot of people think they did, but they said that if you have a under 640, you might have to have more reserves in your bank account
Okay.
because you have to reduce the risk. Even jumbo programs are becoming really, really pricey. And forget about cash out. Refinances on jumbos; those are almost gone too. But yeah, I mean, lenders they have to protect themselves. Like I said, they're not going to last, and they're going to make sure. Also, not only the programs are changing, but they're going to verify a lot more the ability to repay. So they won't start off alone if they have a risk of you going into forbearance as soon as you start. They want to protect themselves. So, for instance, they always verify your employment. They would call your employer, a couple days before closing, just ask if you still work there. You do, great, okay, done deal. But now even self-employed borrowers, if you have a business, they're gonna verify that it's open, that it's still operating, and they might even do this several times up to the day of closing. So if you're unemployed right now, if you're self-employed and your business is closed, just sit tight. If you might want to wait until we're back to normal before putting yourself through this heartache.
Got it. Okay. So it is possible to get a mortgage, but you need to be more prepared and jump through a little bit more hoops.
Yeah, and you have to be working. I mean, I know a lot of people are unemployed right now, so you have to be currently working. Or if you're not, I know a lot of teachers are obviously on break, but they're still getting paid. As long as you're still getting paid, you should be fine. But if you're not, sit tight. And as far as the hoops, you also have to make sure to be ready for it might take a little bit longer. And employees are working from home. It slows things down. IRS offices are closed, making it impossible to verify tax returns. Appraisals are being difficult.
Right.
Appraisals not supposed to enter houses, that are occupied. But for the most part, I have seen that banks are adjusting. They're implementing new procedures. Other forms of verifications are being accepted. Appraisals can be done based on the inspections of the exterior of the house. And I've noticed that a lot of sellers are being very cooperative as well. So you can buy a home. It's just different.
It's just different.
Yeah.
What other changes did you notice in the industry?
Well, we're seeing new developments every day. So, I mean, things change daily and sometimes several times a day. The mortgage industry is dealing with, like all the industries right now are dealing with more than one problem. Because of this adjustment. But yeah, I mean, people like to freak out about serious stuff, and it is serious. But again, it's not 2008. It's 2020. It's different.
So I'm happy that you brought up 2008 because I think that that's the biggest thing that people think of when they think about a crisis. Does it feel that the mortgage industry is more responsible and more strictly regulated at this time? So we won't see 2008 again?
Yes, I do. I do think so because not only is the mortgage industry extremely regulated, but it's a different time. People have a lot more equity than they have in their houses now than they had back then. Back then anyone with a pulse would get a mortgage.
Right.
Nowadays, like I said, you're jumping through a lot of hoops. So there aren't people that are qualified that shouldn't be, as there were back then. And plus, I mean, this economic adjustment that we've seen in these past few weeks, it's not from any kind of wrongdoing or mismanagement. It had nothing to do with housing. Our economy was thriving before it hit. I personally, this is just my personal opinion, I do believe that when we do bounce back, the bounce back will be just as fast as when we fell. We just don't know when that will be. So I don't believe it's going to be like 2008. Housing may eventually suffer a small dip, but not a crash like in 2008. And the only way that the mortgage industry is adapting, like I said before, a lot of lenders are protecting themselves because if they don't, then they're going to be in trouble and they would need bailouts.
Right.
Yeah.
I think that if they won't protect themselves, that's the that's exactly the point that we will start seeing troubles.
Yes.
I love the fact that you brought up the pulling equity out of people's houses, because I'm going to add the data of the difference of how much equity was pulled in 2008 and prior to that out of people's houses, and how much people are pulling now. I personally, from what I see and the data that I look at, it seems that people are much more responsible, and they don't pull equity to buy jets and like do trips and stuff like that. They do understand that their house and the equity that they have inside is such a huge resource, so they are like keeping it for the as a last resort, which I appreciate it about it.
Yeah.
And
Yeah.
what is a good tip that you have to give to new buyers that are looking to buy right now?
A good tip, just be prepared. Have everything in order. I mean, keep, prepare yourself that your lender will probably ask you for a lot of things. For instance, I prefer to have a 100%, the entire picture of every buyer's financial scenario before we move forward, before you get pre-approved to even buy a house. And to prepare them for, it might be a bumpy road, but like I said, new developments are happening every day. So yeah, it could be a bumpy ride. The thing is, we know this pandemic will blow over, and we know we'll get through this.
Right.
But the uncertainty of when is what's causing a little bit of chaos in the bond market. So just time and stability will tell when we'll get back to normal. But for now, just tough it out.
So I think that, like, from what you're saying, I think that the best advice that I can give my clients is just be patient and be more cooperative.
Mm-hmm. Yeah.
With whatever the lender needs. Mm-hmm. Yeah, and understanding. Okay, that's also something that I need to remember, that the things tend to take a little bit longer. I promise I will like be less demanding. I promise. Now you have it recorded. Anything else that you want to add and share with our viewers before we'll thank you for today?
No, I mean, if your viewers have any specific questions, they can feel free to reach out. I'd love to answer any questions they have.
Wonderful. Okay, so first of all, we're going to leave all your direct contact information in the description below, so people can reach out to you directly. Mm-hmm. And that's it. Thank you so much for joining us today. Thank you, Eitan, for all these words of wisdom. I hope that this crisis will pass shortly, and we will see better days. Until then, if you have any other questions about real estate or generally in life, always feel free to reach out to us. If you have any other questions, feel free to leave them at the comments below. That's it. Have a wonderful day. Be safe. Bye-bye.
Over your face! Yada yada does it. Throw an elbow.